Hey guys, good afternoon, everybody. Today is Tuesday, February 25th. It is 1:57 right now. Our scheduled mentoring session is for 2 o'clock, so I'm on a little early today, but I'm going to finish setting up this room real quick before we get started. So just give me a few moments to finish setting this up, and we should be good to go. All right. One last thing. And it looks like we are good to go. So let me get this link sent out to you guys here in the premium. Sent out right there. All right, cool. So I'll get a few moments for people to make their way in. I'm gonna send this over email to you so people can join in here. All right, looks like we are good to go. So good afternoon, guys. Today is Tuesday, February 25th. It is 2 o'clock. Our scheduled mentoring session is for 2 o'clock. So if you guys have any questions, feel free to put your questions in the chat and we can cover whatever you guys need help with. Main thing that I'm looking to focus on today is mainly going to be the MPSv2 A++ setups and some of the confluences that I've been using for my entries. So that's pretty much what our main focus will be for today. Again, if you guys have anything specific you want me to cover, any trades you guys were looking at, need some review on it, feel free to hop into the chat. Hey, Shannon. Yeah, definitely. Good afternoon. All right, looks good. So it looks like people are still on their way on. So if you guys have any questions specifically, feel free to hop into the chat. We're just gonna try to get through this, as efficiently as possible. Typically, I'm on these mentoring sessions for a little too long, so I'm gonna try to just get through the questions, go through a couple of examples, and then we'll wrap it up probably within an hour or two today. Hey, Kyle, Christian, good to see you guys. Okay, so let's just get started. So main topics for today, and I'll put this over here real quick. So main topics to cover today are going to be momentum, pullback scalp V2 strategy, MPSv2 A++ setups, market profile, volume profile, Confluences. So these are going to be the main topics for the day, guys. So we'll go over the momentum pullback scalp V2 strategy, MPSv2 A++ setups, market profile, volume profile, and common confluences used. That's basically what I have for today. If you guys have anything specific that you want me to cover, feel free to hop into the chat and we can cover those other questions. But for the most part, this is what I'm going to zoom through today. And if there's any questions at the end, we'll cover those as well. So. All right, so with that said, let me just copy this. I don't want to delete it on accident. Yeah, so what I'll do here is I'm going to copy this first and clean the chart. And I'll put it back on. So let's start off with the MPSv2 strategy. Let me see if I can find an example over here, and then we'll cover that, and then we'll go from there. So I'm going to look for a good entry here. Obviously, no red flags. Okay, so there's one right here. I'm just going to go on replay. It's the most recent one that I can see. So let's start off with the MPSv2 strategy. On some pullbacks, scalp V2. All right, so here are the requirements. First requirement here for the momentum pullback scalp V2 strategy is to identify the current direction of market. To do that, you want to identify where price pushed away from. So looking at this here, price has been pushing up from this lower point. So this is going to be the low point right here. And we got price pushing up from here, right? So I'm going to go ahead and mark a green marker right there. And the way I identify this is I'm just looking for swings in the market. So for example, we had price kind of push down from this point, and they pretty much alternate. So initially we had price push down from here. That's a sell bias because the sellers were in control right here. You can see price push down from this high point, basically this green candle. And then from here, price pushed up, right? So we had a swing down, a swing back up. And then you can use the Kodi Kai reversal indicator to identify reversal pattern. So price pushed up from here. This is a high point. Price did not break past this area. And then we have an engulfing candle right here. So this is a push to the upside. It established a ceiling. Then we had a reversal pattern right here. And then from there, price came down a bit. So this is going to show that the sellers were in control from this point, and then vice versa. We established a lower point right here, basically a floor. We have another engulfing candle right there. There goes another reversal pattern to the upside. And you can see that price never comes down and breaks this lower area, right? So let me we got the floor right here. Price never comes down and breaks it. So we have obviously a bullish push. And then same with this prior, we had price push down from this area. And it never pushes up to break it. So we have a ceiling from here. So we had sellers in control here, then we had buyers in control. Looking at step one, you want to identify the current direction of market. So it was bearish here and now it's bullish. With that said, you're only going to look for buys at this point. After you confirm step one, you move on to step two, identify momentum and direction of market. So looking at this here, we had a bullish momentum. There's actually two entries here. So I'll show you both of them. There was an MPSv2 that was right here. So it happened earlier. It's just that price came back up from this point. So there's one entry right here because we have a buy signal, price pushed down, the buyers became back in control at this point. So step one, identify the direction of market, which is bullish right here. Step two, identify momentum in direction of market. We had a buy signal that was right here. I mean, this happened a little while ago before the shift in market direction. The thing with this here is that this entry came up a little later in the market. So you can see the volatility here is kind of low. We had a market going sideways. The ATR was 17. So like in some situations like this, if you're trading in a sideways market, the entry might come a little later. I wasn't focused on showing you guys this entry, but there are two entries that happen back to back. So I'll show you both of them. So for this first one right here, we had price with the buy signal. Price retraced down from this point. There was no sell signal. So the buyers were still attempting to push price up. Right here, we established a floor, and then we had an engulfing candle right here. So this confirmed that price was going to push up from this area. Therefore, I'll just replace this candle right here just to show you the first entry. So price push down, buy signal, buyers in control. Step three, identify retracement against direction of momentum or direction of market. So price pushed up. There was a retracement right here off this red candle. And once you have the retracement, that's step three. Moving on to step four, confirm confirmation of continuation in the direction of market. To confirm that, you just want to make sure that a green candle breaks and closes past momentum, right? So we had bullish momentum right here. Bullish momentum. This red candle right here identified a retracement. And then this green candle right here broke and closed above the momentum, which is this black line. And this is where it sets up for your entry. So again, step one, identify current direction of market. It's bullish from this point right here. Identify momentum in the direction of market. There's a buy signal right here. Step three, identify retracement against direction of market. Right here, price pushes up and it comes back down off this red candle. It retraces for quite a bit. And then it finally confirms right here the continuation off this candle, which breaks and closes past the momentum. Once you confirm that right there, you can enter. So on step five right here, it says enter on a close of continuation candle, which is this green candle right here. On top of that, we have a confluence here. There's an engulfing candle. So there's a couple different signs here to identify, okay, this is probably a good entry to take. And once you take that there, you can enter here for a buy. There's different TP stop losses you can use. If you want to use a 1-to-1, you can use a 20-20. If you want to be a little safer, like the volatility is a little higher. Right now, it's not high because it was at 23 ATR. So you could have probably gone for 20-20, or you could have done a 20-30. Or in a situation where the volatility is higher, you can go for a 30-30, right? It just kind of depends on what you're looking for. If you want to go for something bigger, go for something smaller. It just really depends on the market condition. Right here, the ATR is at 23. So in this situation, you can go for either 20-20, 20-30, or 30-30. It's not a huge difference. It's off by like 10 points. So once you have it set up, you let the trade run. You can see price pushes in profit right there. Pushes further and it hits TP there with no drawdown. So price never comes back down for drawdown. So that's one entry right there. Let's keep pushing up further. So again, right here, basically the trade resets. So it resets right here. See how we have a sell signal? The reason why it resets is because for this specific strategy, you need a buy signal, right? So in order for you to take another entry, you have to wait for the next buy signal. Right here, we already have the setup pretty much kind of building up to like what we need to confirm the entry. And let me see. So let's go to the buy signal. There we go. Okay, perfect. So this is where the entry actually happens. So price pushes up, we get another retracement right here with the sell signal, and then we get a buy signal here. Once we get this buy signal, this is where the whole setup resets. Because we already had a setup down here, and this one already hit TP, so you have to wait for the retracement, which happens on this red sell signal. And the confirmation happens again right here for the bullish move. So price retraces down a little bit. Let me see how far it retraces. I guess we could say the sellers got back in control here for a little bit, not very strongly, but just for retracement. And then buyers come back in control right here. So buyers in control, price pushes up, small retracement, buyers push price back up. We have another floor right here that's established. And then the whole setup just resets. So again, let's look at the criteria. Step one, confirm current direction of market. Right here, we have a floor established. Price pushes up from this point. Price has not pushed below. So it shows that the sellers or the buyers are in control here. Sellers were pushing price down, they failed to hold, price pushed back up, and now we have the buyers in control. So for step one, identify current direction of market. Right here, we have the buyers in control, of course. Step two, identify momentum and the direction of market. We have a buy signal right here. That's going to confirm step two. Step three, identify retracement against direction of market. So we have price push up right here from the buy signal. We have some red candles right here. This confirms a retracement. So price pushes up slightly, retracement on this red candle. It doesn't have to be a big one. It just has to be any sort of retracement. Step four, identify confirmation of continuation in the direction of market, right? So again, like we did earlier over here, we want to confirm that we have a candle that closes back above momentum. So we had a buy signal here, retracement, and then this green candle right here is going to be the confirmation above, right? Because it closes above the black line here. So momentum to the upside, retracement, confirmation. We now have steps 1, 2, 3, and 4 confirmed. Now we can go to step 5, enter on the close of continuation candle. So when this candle here closes, that's where you're going to be ready to enter your order. As soon as it closes, you'll enter your buy. Again, you have a choice of your TP stop loss. If you want to go, right now the ETR is at 17, so I probably would just go for a 20-20 on this one. But again, it just kind of depends on what you prefer. If you want to go for 20-20, you can do that. If you want to do 20-30 because you're worried of some retracement, then you can do that. If you want to do a full-on 30-30, you can. However, the 30-30 I think will be a little more risky versus a 20-20 because the ATR is a lot lower here compared to before. So again, it just kind of depends on what you prefer. If you want to go for the 20-20, if you want to go for the 30-30. Ideally, I would go for the 20-20 here. I would just increase contract size to make the same amount of profit, but go for a smaller target here. So again, we have the setup here, bullish direction, bullish momentum, retracement, confirmation, everything set up there. You take the trade, price pushes down for a little bit for retracement, pushes back up, pushes through further, and of course it hits full TP right there. So there goes a setup for an MPSv2. Pretty simple, pretty straightforward. You just have to follow the criteria here. You know, if you want to add more confluences to it, you can. A couple confluences that I would look for here would be market profile. Typically, I'd look for rejections of certain structure points. So I look at rejections off point of control, look for rejections off of the value low, value high, you know, etc. This entry right here came up, let's see. Entry right here came up at 9:56. So let me see if there was any confluences over here around that time. Not exactly on the 30-minute. Let's go on the 1 minute. So try to get this here. Okay, perfect. So that entry came up around 9:30. Or 9:55 actually. Okay, so we have a couple confluences right here. I mean, the main confluences would probably be, I mean, there's some pretty decent confluences. We have a confluence right here, price rejected off the point of control, and then we have another confluence over here, price rejected off the value high. So we have two areas of rejection right there. That'd be one confluence that I would use. Let me check the volume profile. Looking at the volume profile over here. I don't see any confluences over here specifically. So mainly the main confluences I would see from this point. Let's go here to the queen chart. And she was at like 9:30 or 9:50. Okay, so another confluence right here. So again, like I said earlier, I use multiple confluences to identify, you know, confidence in my entry. So this entry here came up at 9:57. There was one confluence over here, rejection off the value high, and then another confluence right here, rejection off the point of control. Those are a couple different confluences that I would use, and then another one over here on the 1 minute clean chart, rejection off the whole number, 650. So rejected off the 650 at 9:52, and then my entry happened over here at 9:57. So see how like this entry would come up, and I'm like, okay, there's a confluence right there. It's bouncing off the whole number. So that would give me confidence in taking the entry. But again, it just depends. You don't have to have those confluences. Those confluences are optional, but obviously the more confluences you have, the better. So there goes an example or two examples of the MPSv2 strategy. If you guys have any questions regarding this, feel free to hop into the chat. Otherwise, we'll be moving on to A++ setups. So I'll see if there's any questions here. If there's nothing here to cover, then we'll move on to the next one. If you guys are just joining in, here is a list of things that I plan on covering for the day. So if you guys have any questions regarding the momentum pullback scalp V2, this is your time to ask questions, because once we move past this, we're going to the MPSv2 A++ setups. We'll go down to market profile, volume profile, and then we'll go down to common confluences used. I'm going to kind of like sprinkle in some confluences. Like, for example, right now, I just showed you guys these confluences. There's just a couple that I list here. I'll just add them to the list, actually. So I'll kind of, so you guys have an idea of like what to look for. So let's see, value. Projections. 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 There's a whole bunch of confluence you can use. Projections. Session projections. I'm basically looking for rejections. So like, these are going to be like the confluences that I'll go over. I'll kind of show you guys examples of that. I'm trying to think if there's any other, rejection that I'm looking for. Sessions rejections, I guess, support resistance rejections too. I think that's all I can think of. So, all right, yeah. Again, if you guys have any questions regarding MPSv2 strategy, feel free to hop into the chat. Otherwise, we're going to move on to the MPSv2 A++ setups. Question from CJ. CJ is asking, would the last MPSv2 be one that you personally skipped since it rejects directly off the sessions? So the entry happened before that, CJ. So there would be no way for me to identify that specifically, because the entry was already active before that. So I would have been in this position. The reason why I would have been in here is because we had a bunch of other confluences. So we had this confluence over here rejecting off the value high. This was at like pretty much right before it. We also had a rejection over here off the whole number. This was like a couple minutes before it. So we have two confluences here, which would give me confidence in the entry. Rejection off the whole number, which is the 650. We also had a rejection over here off the value high. And then on top of that, we had a bullish trend with regard to the pivots and bullish trend with regard to the trend meter. So there's actually a lot of confluences here for that specific buy entry. And that's why I would have taken it. But the rejection off the sessions would have been while the trade was active. So looking at this here, I would have been okay with the previous rejection. So if you're talking about this rejection over here, I would have been okay with it because I actually want to see that rejection there. So the entry happened on this green candle right there. So as soon as this candle closed, I would have taken it. We have the rejections right here off the pivots, or not the pivots. We had the rejections off the sessions. I would have used that as a positive confluence, not a negative one, but a positive one. If the entry candle would have rejected off it, then I would have skipped it. But I do like to see rejections off it from the bottom end, because if we're taking buys here, so you just add up the confluences. Let me just put the list here. Confluences for this entry. So we had a bullish trend, pivots, bullish trend meter, bottom rejection of sessions, bottom rejection of value high, bottom rejection of whole number. So there's a lot of confluences right here. So in a situation like this, CJ, I would be okay with the bottom rejection. If we had an upper rejection, then I would have I would have just skipped it. That's the situation where I would have skipped. So say, for example, we had a session right here, right? Just, for whatever example, we'll say there's a session right here. If I saw this right here, then yeah, I would have skipped the trade. But because we have a bottom rejection, this is actually good to see. Because we don't care if it's touching it prior, we care if it's touching it on the actual candle. So like, for example, if the session was like up here and touching the entry candle, then in that situation, I would have been like, okay, I'm gonna skip this. But if it happened before it, I would have been okay with taking it because this is kind of indicating that, okay, we have a break and retest, right? Break above it, retest, continue up higher from there. So yeah, I just try to go with the flow of the market. I don't try to predict what's going to happen next. I'm just like, okay, this is enough space for me to like reach my TP, and then I go for that quick little push. All right, let me get some water real quick. All right, question from Mike. Mike is asking, does it matter how many candles after the rejection to confirm? So no, doesn't matter because what happens sometimes is, you'll get a rejection that's super far off, and sometimes you get a rejection that's like super like right on point. So like, for example, like this one over here, right, Mike? This one happened like way before. This rejection happened at 9:39, and the entry happened at like 9:57 right here. So this is about like a 10 to 15 minute gap right here. So this is fine because this is still going with your storyline. Like when you're trying to analyze like your confluences, you just want to see like a storyline, right? You want to see this type of pattern. Like ideally, you want to see this pattern anyways. So if you can kind of tie that storyline with what you see here on price action, like basically in order for you to create your storyline, you just want to look left, right? So if your entry is right here, you just want to look left. So you want to see what happened prior because your storyline is going to tell you what's going to likely happen next. So looking at this here, even though this happened, quite some time earlier, if you go farther back, Mike, if you go back like over here, you just don't want it to be super far out, right? Like right here is okay because it's like 15 minutes or so, but you don't want your confluence to be like an hour away, right? Because at that point, you're like, okay, that's like way too far out. Like for example, right here, there's a rejection, but this is way too far out. This is kind of irrelevant because your entry is way over here. So I would say it doesn't matter how short, but it does matter how long. So I'd probably say look for your confluences within like 10 to 20 minutes. But anything past, I'd say like past 30 minutes to an hour, then in that situation, it's just way too far out. It's kind of irrelevant because the price action is going to change. Like went sideways here, pushed up, and then this area right here is what matters, right? Because your entry is right here, and you kind of want to see what the storyline is telling you from this point. Mike said, does the size of the rejection candle matter? No pun intended. No, so it doesn't matter. It doesn't matter. Really what you're looking for is just looking for that wick rejection. It doesn't matter how big the candle is, how big the rejection is. All you care about is the rejection. Because if you see a rejection there, like for example, this one barely rejects off it, but it still does. It's a small little candle, right? You just care that there's a wick there. See how there's like a little wick that's pushing away from it? Because it's showing that price failed to come back below it. Basically, what the price action is telling you here is that price pushed up and it was trying to push back below it, but it failed to do so, and then it pushed back up. And then from here, you're looking for that same pattern to just repeat itself, right? So yeah, size doesn't really matter for the most part. You just want to see that wick rejection because that wick rejection that happens here is going to it's going to tell you like, hey, there's probably going to be a continuation this way because there's just so many confluences in that direction. We have the rejection, plus we have the trend, plus we have the trend meter, plus we have confluence with regard to whole numbers, plus we have momentum. So yeah, size of the candle doesn't matter. I would say the size of the candle would matter for your entry. That's the only time the size of the candle would really matter. And let me see if I can find an example here to show you why. So, I mean, it doesn't happen very often, but it's something that we try to look out for when we're taking entries. Let me save this real quick. gonna save this in case I'm gonna clean the chart up. And I'll put that back up here. Okay, so let me see where there's a huge candle. And okay, so this is kind of an example right here. I know there's no entry on this candle right here, but this is an example of like why the size of the candle would matter. See, this candle right here is huge. This is like a 92-point candle. In a situation like this, if you have an entry, and I'll just replay this candle here. So this entry, this would actually be a pivot scalp entry. But because the candle's so huge, you wouldn't want to wait for entry or you just skip it. Because the thing is, if you're entering this position and your TP stop loss is 30-30, typically when you get a huge candle like that, it's going to retrace at least a little bit, before it pushes back up. Or it in a lot of situations, it doesn't even push back up. It just ends up reversing the other way. So the only time right here is really to avoid, a huge candle, because look at what happens next. Price retraces down. Typically what happens is price, if this candle is too big, it's going to retrace to half of the candle. And then two scenarios will happen here. So typically price will retrace to half of the candle. And this is just from experience. We've been seeing these patterns happen all the time for years. So it'll typically retrace to half the candle. And then once it gets to this point, one of two things is going to happen. It's either going to correct back up or it's going to full on reverse. You can see over here, price kind of bounces around a little bit. And eventually it reverses. So you don't want to be put in this situation, because if you take an entry like this, you're kind of just, you're taking a gamble, right? You're not really trading with edge, because you don't want to have too many scenarios play out. You want to have like one scenario. Like you want to have that entry up there and you're like, okay, this is going to come up and continue pushing up higher. You don't want to have a situation where you're like, you don't know if price is going to go up or if price is going to go down. And over time, you just get better at seeing those things. And for me personally, I just avoid those trades. When something like that happens, I just don't trade, because I already know I'm going to get screwed. Like I'm either going to get lucky and be happy about it, or I'm going to get screwed and I'm going to be pissed off because I know I should have just skipped it. And that just comes from chart time, right? If you see these entries come up, a lot of times you're going to start to learn lessons from it. Like how many times you're going to get burnt until you stop getting burnt. Again, it just matters. This is when the size of the candle matters, because when the size like this happens, and again, this previous candle right here, same thing. Right, this candle right here was almost 40 points. The rule of thumb is that if the candle is bigger than your stop loss, then it's too big, right? If your TP stop loss is 30-30, this is too big. You don't want your stop loss to be farther than your candle. Like for example, if you were taking like this entry over here, this is an MPSv2. Buy signal, retracement, green candle. This is the MPSv2. If you're doing a 30-30 or 20-30, see how if price does retrace back to the candle, it doesn't matter, because it'll just push back up. Or odds of it will push back up from here. Because if it does retrace back a little bit, that's fine, eat some drawdown, and then have it right back up to where it's supposed to go. So just, something to keep in mind, guys. There's always so many different ways to analyze the market and analyze the price action. There's just a couple of things that I learned over the years that, I understand to avoid. Like for example, here, see how this candle is a big green candle? Let me just go over here. I'll show you an example of it. The candle is pretty big. If my TP stop loss is 30-30. Again, see how this candle is bigger than my stop loss? I'm just going to skip this trade. I wouldn't take it, because look what happens here. Price pushes up a little bit, pulls back, and then probably pushes back up higher. See what happens there? It stops you out, and then it goes right back up. This is how you get screwed. And I've been screwed one too many times, so I don't fall for that trap anymore. All right, so let's see. We're all done with that there. Let's see, Schwab's a good example, was a loss on Monday. Let's see. So the loss on Monday, let me see where I just replayed. I know where it was. lost on Monday. I think the volatility was just too high. I mean, CJ called that out too. Like the loss I took on Monday, it was a dumb trade, honestly. It was like a FOMO trade for the most part. Because the candles were moving kind of crazy. CJ even said, CJ was going to sit out because one candle could easily stop us out of that position. And I think it was this. What was it? Yeah, it was this one, right? Or I think it was. What was it? It was the engulfing. It wasn't a V1. It was yeah, it was this one right here. So I got screwed on this position here. This is actually a good example. Yeah, Shabam, you're correct. This was the candle was too big. There was a dumb entry on my end. Like I really should have just, I should have followed my rules. I didn't follow my rules on this. This was like the only loss. There was 9 wins and there was 1 loss. I took the only loss here because the candle was so big. So this is an example of like what I just said. Thing is, I wasn't thinking correctly on for this specific entry. I think this candle dropped at the last second. I think that's what we were looking at, right? Because we were looking at it here, and I was like, okay, this is gonna be a V1. It's gonna be engulfing. I didn't realize it was such a huge candle. So what happened here is I entered the position. And again, I didn't measure it before I entered the trade. I should have known because this candle was huge. And I should have been like, okay, this candle's huge, so it's probably going to retrace back a little bit before it comes down. And that's exactly what happened here. It came up, it stopped me out, came up, came down. Wait, was it this entry? Oh no, it was, yeah, it was one before it. Yeah, but and it's same like same concept. The thing with this is that it wasn't that the prior candle was too big, it was that the other candles before were too big. So like see these candles over here? Like the problem with this entry is that we're not used to seeing this type of volatility, right? Because like usually the market's been kind of slow or it's been ranging, but the problem with on Monday was that every candle here was huge. This candle was huge. Let me measure it. Every candle is like a minimum of 40 points. 40-point candle, 50-point candle, 40-point candle, 50-point candle, 70-point candle right here. And I was just thrown off. Like the price action just threw me off. The issue here is that I ended up, see, if I would have waited and just like waited for, an actual solid entry, like for example, this one would have been a solid entry right here, sort of. The volatility in general is just too big. So let me go back to this bar right here. See, the ATR was at 30. And my stop loss was at 30. So it would have been better if I used a wider stop loss. When the ATR is super high like this, you want to have your stop loss a little bit wider. So instead of 30, I probably could have done like a 40-40 instead. Because if I did a 40-40, I would have gotten close to my stop loss, but then it would have came right back down. It's just ATR was too high. ATR was too high, volatility was too high. There's just a lot of things here that were coming in play that we just weren't used to in the market lately. Because the week before, market was super slow, and obviously, this week, it was just a surprise that we had that big spike right there on Monday. Yeah, exactly. Yeah, CJ said that the large candles happen sporadically between smaller candles, and we couldn't pinpoint why the market was moving like that. Yeah, exactly. It's not what we're used to seeing because typically we'll see the drop. Like for example, the market dropped here, and if you look at our stats for that day, like there was a lot of entries that came up. Right, we had 1, 2, 3, 4, 5, 6, 7, 8, 9 entries. Um, but again, it was like hard to tell because we had huge candle, small candle, huge candle, small candle, small candle, huge candle. Um, so we had kind of like this type of movement: spike, spike, spike. See, it was kind of like it wasn't smooth. It was very choppy, and then obviously, if you get in at the wrong time, which I did, he got caught in that spike there. So it's all good. It happens sometimes, and that's just it's part of the game. So there goes that. Again, if you guys have any questions, specific questions, feel free to pop into the chat. Again, the next topic here is going to be an A+ setup. So I'll see if I can find an A+ setup here. So sell MPSv2. It's kind of later in the session. I'm going to look for one that happened earlier. Okay, so MPSv2. Okay, here goes an example right here. So this is an example of an A+ setup. Basically, the A+ setup is, it goes in line with the MPSv2, but there's just different scenarios. So for this scenario right here, we have an MPSv2 buy signal. I'll mark up the control right here. So sellers in control right here. Buyers in control right here. And here's the setup. So for this scenario right here, this would be scenario number 2. Yeah, scenario number 2. So looking at scenario number 2, we have a reversal continuation. So first, the sellers were in control right here. There was a ceiling that was established. The sellers pushed price down. And then right here, we had a floor established. And the buyers were in control, right? So right here, we have the buyers in control. Looking at scenario number 2, first, you want to look for a reversal continuation. There is a V1 pattern right here. This is a reversal pattern, double body rejection. So this established the floor and then price pushed up. That's going to be the first one. The second one is the MPSv2. We have a buy signal right here, retracement continuation. So this right here is going to be the MPSv2. And the third one is going to be reversal continuation. So the next reversal continuation is on the following candle, or 2 candles over. We have a V1 and an engulfing right here. It's also projecting off the session right here. And that's going to be the setup. So let me just replay it here. So again, reversal continuation, V1 right here, it establishes the floor. MPSv2 right here off this momentum, entry right there. And the third one is going to be the reversal continuation. Once we have that reversal continuation right there, you're going to enter on the V1 or engulfing close, which is going to be this green candle. Again, your TP stop loss, it just kind of depends on what you want. Like for example, the ATR right here is pretty low, so I just go for a 2020, 17. I let the trade run. Pushes in profit right there. Pushes further. And then it hits TP right there, blasts right through it. So I mean, again, it depends on what you want to use. If you want to go for the 2020, the 30-30 doesn't make a huge difference, guys. So like if you want to go for the 30-30, you can. You know, I would just adjust your TP stop loss or adjust your contract size. For me, I just like getting in and out quicker. So I'd rather just go for 2020 or even 20-30 just to get in and out of that position. But there was like little to no drawdown here. So for the most part, worked out. Yeah, Nikki said I do 20 with the trail and she loves it. Yeah, I mean, that's another thing too. Like the thing with me is I can't really use a trailing stop. I know before I used a trailing stop a lot, but I'm trading like 60 accounts now. The problem with me using a trailing stop is that if it has an error on one, the error carries over to all the accounts. So I can't really use a trailing stop anymore. If I had to use one account, I'd use a trailing stop, but since I'm trading like 60 accounts now, I can't really use a trailing stop. So I just have to go for those targets. Or else, you know, I don't want to have some errors with the replicano that will trap me in the position. So again, there goes an example of an A+ setup. If you guys want to see another example, just let me know. But I mean, it's pretty self-explanatory. Like what you're looking for here is you're just looking for a continuation, right? We look for the reversal, MPSv2, and then reversal. Or sometimes you look for 2 reversal continuations and then an MPS. And then, you know, the scenarios are here for you. So it's really just reversal, reversal, MPS, reversal, MPS, reversal, 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 MPS, MPS, reversal, reversal. So you're basically looking for a leg. These A+ setups will finish a leg movement, right? So like once this leg is done, now you look for the retracement, and then you look for the next leg. So it's pretty much just you take the trade for the first leg, wait for the retracement, and then again you look for another trade on the next leg. Or if it ends up reversing, so say for example here, say for example you have this leg here, price comes down, consolidates, and it comes down this way, then you're just looking for the next leg right there the other way. You're just looking for that one leg for entry, or one stride basically. Let's see, quick question from Shabam. So Shabam said, slightly off topic, what's the current win rate for momentum strategy? For the MPSv2, honestly, I don't know, but it's really high. So I haven't updated the spreadsheet, Shabam, but it's really high. I think, if you look at our stats here, so I posted the stats for like all the previous months. Let's see. So we started applying to MPSv2 like second or third week of I'm gonna post that. I think I posted in the announcements. Okay, yeah, here we go. So looking at the MPSv2, we pretty much started applying it like I think third week of, or I don't know if it was the third week or the second week of January, but you can see here that most of the days here that are like basically if the days are green, that means we have one or two MPSv2 entries that hit. You can tell from the trades here. So like for some of them, I took more trades than others. Like this one, there was only one trade. This one was like 2 or 3 trades, and then this one was like 2 trades. This was one trade. So if you look at the math here, or you just look at the green, like you just do by color, right? So like if we just do 1, 1, 1, 1, 1, 1, here, let's do math. Let's just add it up. Shouldn't be too much. So I'm not going to count these up here because I don't think these were scalps. I think these were still breakouts. During this period right here, we were still taking the breakout entries. So I'm not going to count those as MPSv2s. You can tell because the profits are way different. These are like way bigger profits because the breakouts were for bigger moves, and these are smaller trades. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So we'll do 14 wins, and then 1, 2, 3. So 14 divided by 17. It's about 83% or 82% win rate. It's probably going to be higher because there was more entries on like certain days, but I'm just going to count it as like 1-to-1 basically, or just like 1 entry per day. So basically there was 14 green days and then 3 red days. So that shows that we have about an 82% win rate for the MPS. If we're doing it by day, not by entry, but by day. If you went by entry, it'd probably be more, like closer to 85, 86. But yeah, it looks about right. Okay, perfect. Yeah, Shivam said lines up with his back testing for February, 83% so far. Yeah, so I think that's about right? It's gonna be around that area. About 83 to 85, maybe 86 on the higher end. It just kind of depends on like how many entries you end up taking. But you can see that it's a very profitable strategy if you do it properly. Like if you do it properly and you only focus on like the really good setups, then it'll typically work out in your favor. Yeah, perfect. So Shabam over here actually did his stats, so looks about right. Nice, yeah, and I like that you have them right here with A++ too. Very good. Okay, perfect. Yeah, no, thanks for doing this. I'm gonna try to do this and input the stats for ourselves. It's kind of hard to when you because the thing is they overlap, right? Like so for some of them I put like the breakout. I want to have them separated because I feel like the breakout kind of skews the data a little bit because like for one, the data is like the breakout's a way bigger move and the points are way more versus just following it as scalps only. So nice work, Siobhan. Thanks for doing this. I'm gonna save this too, just so I can compare yours to mine when I do update my data. Yeah, Christian said that's crazy, 82%. It's pretty good. I mean, it's pretty good for basically close to 1-to-1 strategy. I mean, like I said, you can do a 1-to-1, you can do a 1 to, I guess, 1 to 0.8. I mean, it just kind of depends on like what TP stop loss you plan on using. If you want to use 20-20, 20-30, 30-30, most of the time it's going to win the trade. So even if you do use a 20-30, it's not going to make a huge difference. Like you should be able to recoup the loss pretty easily. Oh, Shabam said, okay, no apologies in the one strat first trade. Oh, okay, you meant for the breakout. Yeah, so for the breakout, here, let me see. I don't have all the data for the breakout, but I do have. Let's see. I think the last time I updated the breakout was on. Okay, so the breakout hasn't been updated. I guess we can just update it real quick. Let's put it over here. Okay, I'll update it real quick. The last time I put the data for the breakout was on the 10th. On the 14th, actually, which wasn't that far out. So let me go over here real quick. I think the 14th was the prior week. Friday the 14th. Yeah, okay, I think Monday was a holiday. So obviously there's no breakout entry on this day. See 6:30. Let's see, 6:30 happened here. Yeah, there's no breakout on the Monday because that was a holiday. Tuesday was over here. This one would have hit. I'm just gonna add this in real quick. 2, 18, 5, so when Wednesday real quick. 6:30 right here. Get this one as well. Yeah. 1925. So Thursday. This was a loss. Yeah, I'm not gonna pull the data. I'm just gonna make five loss. So if you guys ever want to back test this, you guys can see it doesn't take very long. Like I can pull up the data like super quickly. So right here was open, I believe. So all right, I just have I think 2 more days here. I think yesterday's was a loss. I think it like barely hit stop loss and then it came right back. Right. You actually had that big spike right there on Monday. Yeah, so this was a loss. Monday was the 24th. 2, 24, 25. And then today's was a win. Right. Yeah. 125. 225, 25, 5 win. Okay, so let me just put this in real quick. Shouldn't take too long. Here, I'll do it in front of you so it's easier to see. Okay, so here's the stats for breakout. So like I said before, guys, like the breakout, it's a strategy that works. I just personally don't like it because it just doesn't fit my trading style. So for me personally, I prefer not to use it. But if you guys want to use it, it does work to an extent. Let's see the 10th here. Okay, so let me put the stats over here. This is going to be, we're not going to count the 18th because we have one win before we start taking them. And here are the stats so far. So, all right, Shivam, here are the stats for the breakout for this year so far. So January, it was 8 wins, 10 losses, total profit of 300 points, total trades of 18 trades. And then right here, we had for February so far, 4 wins, 6 losses. But it's still profitable because it's a 1 to 2. So here, let me see, I'll put the win ratio. The win ratio is not going to be as high, so don't expect much from it. Let's see, 12. So 12 divided by 28. It has a 42.9% win ratio, but it's a 1 to 2. So, as long as you're like above 40%, you're going to be profitable. So for the year so far, it's in profit. January has 300 points profit. February so far, 100 points profit. So if you take every single trade, the problem with this strategy though is that you have to have a pretty big bankroll because you have to be able to survive moves like this, right? Like this was like 4 or 5 back-to-back losses. Like this could destroy someone's account. You can't do this with profit counts because you're going to violate your drawdown before you get to that point. You can do this with regular accounts, but you have to be able to like stomach this drawdown. And this is kind of what threw me off because I don't like to lose trades. So this is what threw me off. And I was like, I'm not trying to take these many. I don't want to take these trades anymore, even though it's profitable long term. It's if you get caught in this drawdown, it can really screw with your trade psychology. You just end up like skipping trades, and it just doesn't work out well. You have to be able to take it and not have this phase you at all. So yeah, no problem, Siobhan. Yeah, exactly. So this is if you don't take 50 points, but if you look over here, so look at my January trades. If you took the 50 points, you actually would have done way better. So let me just here, I'll copy this real quick. Actually put it down here. So let me show you real quick. So if you were to take the 50 points, let's just change this real quick. So this would be a win. This would be a win. See, the thing with this here is that here, I'll just change it to like if it's a 1-to-1 um, instead of doing the 1 to 2. Okay, so this is what it would have been. Like you'd have less profits. Oh, no, actually, you'd have more. So over here, if you did the 1 to 2, you'd be in profit about 400 points. If you just went for 50 points, 1-to-1, you'd have 500 points so far. So, I mean, maybe the strategy is better to be applied 1-to-1. But again, for me personally, it just doesn't meet my trading criteria. So I don't like to use them as much. And that's why I prefer to stick to the MPSv2 because we have a higher win ratio if we stick to the MPSv2. So it's a different type of strategy. If you're okay with taking losses and then, looking at the profits long term, then, great, the breakout could be perfect for you. But if you don't like to lose trades like myself, it just makes things a lot more complicated because you're going to lose a lot of trades trading this strategy. The win ratio for this here, let's see. So the win ratio for this for the year, if you're doing 1-to-1, there's no way this. Oh, I didn't change this. That's why. Sorry. So I guess the win ratio is not as bad, but it's still not like what I like. I like having a pretty high win ratio. Okay, yeah, so 18 divided by 28. You have basically a 64% win ratio. It's not anywhere near the 82% win ratio we have with the scalps, but it's still pretty up there. And if it's a 1-to-1, as long as you're above 50%, then you should be fine in profit. Yeah, and like what Shabam said, I'd rather be in and out and be done. Exactly, same here. And I like having like confluences, right? Because when you take a breakout, you're kind of putting your faith in the breakout. You're trusting that it's going to move how you want it to move or how you need it to move. Because if it doesn't and it spikes the other way, then you're pretty much screwed and you don't have any confluences to really look out for. So yeah, it's just up to preference. Anyways, looks like we're done with that there. I think Christian had a question up here. Christian said, "Hey Sean, were you able to see if there's an option to change the color of the labels?" No. So sorry, I haven't gotten around to that yet. I'll put in a note and I'll try to see if my brother can update that. But no, I haven't been able to make that a change yet. But I'm pretty sure if I'll just ask my brother. He'll probably be able to make a quick change. The only problem is that if we make that change, you probably won't have access to the indicator for a while because we're gonna have to like take it down and then put it back up. So we'll try to make that change and then we'll do it in the future when I have time to make the change right away. Otherwise, I'm gone for the week, so I don't want to take the indicator down and then you guys don't have the indicator for a whole week for that small change. So yeah, I'll get back to that. If I forget, Christian, just remind me, but I'll try to get that situated probably by like next week. All right, so there goes the A++ setups. Now let's take a look at market profile and volume profile. If you guys want me to show you how to set it up, I can show you how to set it up. Actually, I'll just show you how to set it up. It's not that difficult. Let's go to, I need to have a clean chart here. Okay, so I'll just use this clean chart. I'll take everything off the chart. Okay, so here's a clean chart. In order to set up the market profile, is you go to your indicators, you'll type in TPO. It's going to come up right here, time price opportunity. You click on that. It's a built-in indicator into TradingView. I'm not sure if everybody has access to it, but it's built in. So the way that you want to do this is there's two ways of doing it. You can use it on the 1 minute, and for me, I use it on two different time frames. I use it on the 1 minute, and I also use it on the 30-minute. The reason why I do that is because the 30-minute gives you the bigger picture, and it doesn't shift as much. And the 1 minute does shift pretty often, but it gives you more of a realistic view of like where everything's supposed to be. So I have two charts here. I have one that's on the 1 minute, and then I have one that's on the 30-minute. So looking at this here, this is how you would set it up. You have the indicator on your chart, you go into settings. These are the default settings. You guys can just leave it as is. For me personally, I just change a couple things on here. So let me go to the 30-minute real quick so you can see things a little better. This is what the market profile looks like by default. This is perfectly fine. If you guys want to keep it this way, feel free to do it this way. If you want to set it up the way I have it. So I go to my settings over here. I go to style. And there's just a few things that I change here. So for the value high or for the POC, basically there's three different things that I use. POC, value high, which is VAH, and value low, which is VAL. It says don't extend. I change this to extend so I can see where it's extending out to. And then all I do here is I change the colors a little bit. So the POC is originally black, but I change it to green so it sticks out a little more. For the value high, it's originally black. You can see the black dotted line right there. I switch it to red because this is typically where you should sell off from. And then for the value low, it's also black. I change it to green because that's usually where you want to buy from. The next thing I do is I go over here to volume profile. It doesn't have the value high and value low enabled, but I turn those on. And then again, I extend these out so I can see where the lines are at. And again, for the value high here, I change this to red. Value low, I change this to green. And the point of control, I leave it as is. You can leave the volume here if you like it like that. If you don't like it, I just go to opacity. I put this to 0. If you want to just have the lines on your chart. So it looks like this. So that's basically how I have this set up. The way that I look at these is, okay, so let me look back to the previous day. So the way that I use this is basically, and I know this is a little confusing. I know CJ mentioned this. The letters kind of throw you off, right? What the letters do here is it shows like each letter is for 30 minutes. Basically, I have it set to 30-minute blocks. And that's like the default. That's usually what people use this for. Each letter represents 30 minutes of time, right? So like basically I'm not sure if the capital A is for Asia session. I think this is for Asia session. I don't know if it's inverted here. Let me see if it shows. So it doesn't really say, but it doesn't really matter because what happens here is this. The thing that you want to understand is that each letter represents a 30-minute block. So see here how it has 8A, there's 3 A's right here. It shows that for the first 30 minutes of market open, this is where the market range was. So if you were to turn off the indicator, you can see that's where that red candle is, right? Because that's where the first 30 minutes of market open happens. So now that I'm seeing it here, the 3 A's that are capital are for Asia session. The lowercase is for New York session. So this could kind of show you like where market was opening. Like if you go like A, B, C, D, if you look at all the A's and you look at all the C's and all the D's, this is going to show you that this is the market range for market open, basically the first 2 hours, right? Which is like this little area right here. So you can either look at this as 4 candles, or you can look at it from the market profile as ABCD. I know it's kind of confusing, but like once you get used to looking at this, it starts to make a lot of sense. The point of control is basically where the most volume has exchanged at. So like you can see this area right here. This middle area is an area that price likes to trade at. So whatever price pushes away from this point, you can expect price to come back to it, right? So if I turn off the blocks here, you can kind of see that like price pushes away, gets this value low, and then it pushes back to the point of control, which is down the middle right here. And then same with this here, price pushes back up, it gets to the value high or up here, and then it comes back down to the point of control. So the main gist of like what I use this tool for is to identify rejection points and identify target points. I don't necessarily use this standalone, but I use this as an extra confluence. Because the thing is, I still draw liquidity on the chart. So, if this thing lines up with like the POC lines up with liquidity, then I can kind of anticipate that price is going to push back to that area. But again, this is just another confluence. It's not something that I use for a specific strategy. It's not something that I use for entries. It's just used for confluence when identifying where the bounces happen and where I think price is going to go from there. So yeah, if you guys have any specific questions regarding market profile, I mean, feel free to ask away. Again, like I said, I have 2 charts here. I have one that I use on the 30 minutes to see the bigger picture. And then I have one on the 1 minute to see the smaller picture. So see how price right here is at the value high? I'm expecting price to come down from here back to the point of control. I'm not taking a sell just because price is here. I would be looking for my price action entries. Like I'd look for an MPSv2 in that direction, right? So looking at this right here, I have the sellers in control. So what am I going to look for here, right? What am I going to personally look for? I'm going to look for a sell signal. I'll look for price retrace, and I'll look for it to come back down. I got my point of control right here. So I know price is probably going to keep dropping. And I also have the point of control right here as well. So I think price is going to keep dropping, right? So this is kind of what I use. I use my own entries here, but having my entries here, I'm also looking for the target, which is going to be lower. So that this lines up with my confluences, and I'm like, okay, if this is the case, then I'm going to look for a sell here, right? I get a rejection off the pivot. I get a rejection off the value high, a rejection off this here. get a rejection off. This is a clean chart. Let me just turn this off. Turn on my levels. And again, like I showed you guys earlier, I'm just looking for confluences, right? I don't see a rejection off here yet. So, I probably don't have enough confluences here to take a sell. So that goes that. I mean, there's a lot of different confluences you can use. I mean, there's not just one. So it just kind of depends on like what you're specifically looking for. But again, that goes market profile. That's what I use it for. I use it mainly for confluences. So looking at the common confluences used, again, there's a couple of things here that I look for. And let me see if I can find some examples here. Let me turn off the volume. I don't really need the volume on here. I don't really use it, so it's not super necessary. I just use the highs. So the examples that I was talking about, so let me just go over here real quick. So the rejections that I look for is I look for rejections on value highs, basically this red line. There's going to be a couple different things here that I look at. Let me see if I can turn off the letters because the letters aren't really necessary. I don't care about them as much. What I'm looking for here is I'm looking for rejections off basically any of these lines. They don't have to be a specific line, but I'm looking for rejections off the line. So for example, if I see rejections off these lines right here and they line up with my sells, then I'll take sells, right? Vice versa, if I see rejections off the bottom right here, then I'll look for some buys, right? So that's all I use it for. I use it as confluence. Like if I have a rejection right here and then I have a buy entry at some point right here, then I would take my buy because it has my confluence there. And this is just one confluence using market profile, right? So like looking at this right here, it's the value high rejections, point of control rejections, value low rejections. I don't really care too much about like price being in the area. What I'm really looking for is just rejections off those points. This is a 30-minute time frame, so it's going to be a little more, it's going to be on a bigger scale versus on the 1 minute here. Right, I'm here on the 1 minute now. Turn off the letters. So on the 1 minute, it's a little more easier to use. So for example, here we get a rejection off like say the value high, and then say for example, I have an entry here, right? Say for example, I have this engulfing candle. Then in a situation like that, I'm like, okay, I'll probably take that for a buy. Probably not here because market was closing, but you can see right there if I went for just say for example, this is an A+ setup. I know it's probably not, but if this was an A+ setup, we have the rejection off the value high right here. It's going to give me confidence into taking that entry. All right, same with this right here. Rejection off the value high, engulfing candle. It gave me better confidence to take the entry there versus not having that confluence. And same with this right here, right? Rejection off the value high. Say, for example, I get a V1 right here. So rejection off the value high here for volume. The solid bar is volume. The dotted line is market profile. So rejection, V1 variation. See how I use that as a confluence? I don't necessarily enter because price is rejecting. I mean, technically, I guess you can enter from here if you really wanted to, but I wouldn't necessarily base it off that because sometimes, like here's an example of you getting screwed. You could have gotten like exactly right here, right? Depending on your stop loss, if your stop loss is tight, like you could easily get screwed right there. It doesn't always bounce off, right? That's the point I'm trying to get across. Because I feel like a lot of people are going to try to enter trades off the bounces, but it's not always going to bounce like that. So for me personally, I would say use it as a confluence. Don't use it as standalone, because odds of you getting burnt taking a trade like that are very likely. Because if it was that easy, everybody would be doing it, right? Not everybody's doing it. I use it. And why does this thing keep deleting? There we go. When I clean it up. Yeah, CJ says the levels are kind of like Fibonacci levels in a way as confluences. Sorta, I would say more so closer to support resistance than Fibonacci. Because the thing with Fibonacci is that, line with the Fibonacci is kind of, it depends on where you place it, right? So like if you use Fibonacci, everyone kind of places them in different places. Like I never see people place Fibonacci in the correct place. Well, I wouldn't say correct places, but everybody places them somewhere different, right? So for example, if you put your Fibonacci up here, see the thing with the Fibonacci is that it adapts with market movement, right? So like market moves down here, like your Fibonacci could have been right here initially, and then now it's down here. Or it could have been like right here. It just kind of depends on like where you set it up and where you extend it to. The thing with market profile is that it identifies the volume. So it identifies volume and the time of price. So what happens is that it sets these like levels and these zones here, basically based off market data. Same with the Fibonacci, but the Fibonacci is like more subjective. Unless you're using a Fibonacci indicator or a tool that does it for you automatically. Um, they're like slightly, it's not always going to be at the correct place or the same place where it should be. The thing with the market profile is that when you set up the the settings, it's always going to be in the same area. I mean, the only setting that you could change here that would really make a difference would be the value area percent. I typically like to use 90, but because I have the volume set up here, I just leave it at 70 because I already have an outer level there in place, right? Typically, if you don't have volume set up, so like say for example, you turn off volume profile, right? And you only have market profile, then it would make sense to use a 90 because you get kind of farther out. For me personally, I like to use the volume profile as well because the volume profile will give me like a better understanding as to like where like if they line up. So for example, here these are not lined up, right? So I have like a first level and then I have a second level, just in case. And you see like when these line up, so now they're lined up, right? At this point, you're like, okay, these line up, this is probably gonna be a strong area of resistance or a strong bounce area. Because now they're lined up together. Like for example, these are lined up now, the dotted line and the solid line, and these are lined up together. And same with the point of control. When you have the time in when you have the market profile and the volume profile lined up together, it usually indicates that okay, this is probably going to be a legit area, right? It's legit. Because a lot of times they don't line up. Like if you go over here, let me go to yesterday's. So see how they're a little far off. Like if you look at yesterday's over here, the spread is kind of far, right? Between the two, the volume and the market profile. So if you see something like this, you're like, okay, that's probably not going to be a good area to be catching that bounce. You probably want to wait for it to push out of this area. And then vice versa down here. See how this is like this is closer? Like these kind of lined up with each other. This could be like a better area to identify when they line up with each other. But again, it just kind of depends. If you do some research on market profile and volume profile, you'll see that people kind of argue different. Some people say volume is better. Some people say TPO is better. It's just, it depends on the person. So if you just want to use market profile and not volume, then that's perfectly fine. You can do that, and then you can even probably adjust it to 90. And that's something that I would do. See, like now I have it at 90. It doesn't make a huge difference, but it does make a little bit of a difference because it gives you more of an edge. Not an edge, but it kind of edges out a little further. But the thing is, you don't get as many rejections though. So see the rejections right here. There's like maybe like one. I mean, if there's only one there, maybe two rejections. Versus if you have it at 70, you have a little more confluence there. And the thing is, I use it for confluences. I don't use it for rejections specifically. So for me, it doesn't really matter. I don't mind using it at 70 or using it at 30 or 90. So we have rejection there, rejection there, rejection there. So it works out more in my favor because I'm like, okay, I got a rejection there, I got a rejection there. So I can take those for sells, and I got a rejection here, I take that for buy. Because my entry could have happened right here at the engulfing. Right here, my entry could have happened at engulfing, and then same with this, so rejection right there. Entry could have happened at the engulfing. And it just kind of depends. So, all right, guys, there goes market profile and volume profile. Again, if you guys have any questions, feel free to hop into the chat. I think for the most part, we covered everything that was necessary for today. Looks like Nikki's done for the day, so I'll see you tomorrow, Nikki. And Kyle is done as well. But I think we covered all the main things that we needed to cover. The confluences, again, you're just looking for rejections on value high, point of control, value low, sessions, key levels, and support resistance, which you guys will see on the live session. I'm typically marking them up anyways. So it's not going to be something that's going to be tricky. It's going to be something that you're going to be looking out for, because I'll be looking out for it during the live sessions. But all right, I think that might be it, guys. I don't really have any other things to cover today. Unless you guys have more questions, feel free to ask away. Otherwise, this was a pretty good, efficient session. I think we got through a lot of this stuff pretty quickly. We've been on this for a little over an hour. And yeah, I think we covered everything that was needed to be covered. Yeah, no problem, CJ. CJ said, got it. No problem, Mike. And yeah, I think that's it. So, all right, guys, we covered a lot of stuff today. Again, if you guys want to see what was covered, I covered this stuff today. I'll put this in the notes so that you guys know what to look for in the video. Main topics we covered was the MPSv2 strategy, MPSv2 A++ setups, market profile, volume profile, and then commonly used confluences, which a lot of this stuff you don't necessarily need to know, very specifically, because they're just rejections. I'm looking for rejections off lines. That's really what I'm looking for. Rejections off market profile, value high, point of control, value low, volume, sessions, whole numbers, key levels, and support resistance. And that's about it. So, all right, guys, if you guys have any questions, feel free to hit me up on Discord. Otherwise, I got a couple of meetings to get into right now, so I gotta get off this live session and hop into the next meeting. So again, guys, if you guys have any questions, hit me up on Discord. Otherwise, I will see you guys back here tomorrow for